Time now for the markets with Leighton. And Leighton, you say that some are describing the corn trade as moving in a holding pattern.
Apparently holding for the September crop report numbers out in another week or so. Also in our headlines this week, the month of August ends with weaker soybean prices. The poultry sector enjoys higher market prices, while U.S. cattle placements are at their lowest level since about 1996. Soybean prices continue to feel pressure as we transition from the month of August to the month of September. Although the Mid-South has not seen much in the way of rain this week, other regions of the country have. Analyst John Roach says the trade is expecting this moisture to only boost U.S. yields. He thinks this positive opinion is only going to continue to keep a damper on soybean prices.
So far, what we've been spending all of our time doing is focusing on the size of the U.S. crop, and it's big, big, or bigger. I mean, maybe not quite that big, but even bigger, or you just take your degree of big, and that's what it is, and the markets come down, and now we get a little nervous about bringing the crop home. There's also a gap between now and the time beans become available, and I believe that when beans become available, they won't be available. Farmers are not going to rush to sell beans at this price. They will drag their feet, they'll have their heels buried in the ground, and the buyer is going to be frustrated trying to get his hands on those beans.
Meanwhile, lack of demand is a growing concern among some observers as far as the U.S. corn market these days. AgFacts.com reports the trade in general does not seem to show a desire to commit to the large and growing yield projections for 2014. Analyst Tom Fitzenmeyer, though, seems convinced the huge crop is here and that demand is nowhere on the horizon to shore up prices for farmers.
We've got the highest priced corn in the world, so export, how's that going to go up much? Ethanol's capped, so we're not going to go much above 5.1 billion bushel for that. Livestock number, obviously cattle and hog prices are high because the numbers aren't there, and while I understand that eventually that's going to turn around, it's going to be a while. So I just don't see enough demand swooping in here to gobble up a 1.8 to 2 billion bushel corn carryout.
Let's break from the markets to look at our trivia quiz, and here's the question for you this week. What class of tree does pine lumber come from? Is the answer A, conifer trees, or B, deciduous trees? I'll tell you at the end of the markets. If you use Mississippi-based Sanderson Farms as a barometer, things look positive for the chicken business. In the Laurel Company's third quarter report this week, Chairman and CEO Joe Frank Sanderson Jr. said that they are operating in what he termed favorable market conditions. Sanderson says market prices for chicken products are higher than the same period 1 year ago. Also helping the bottom line, cash corn prices, a key ingredient of chicken feed, decreased by almost 29% compared to this time in 2013. A key monthly report card on the status of the cattle market was released August 22nd. Extension Ag economist Brian Williams sat down with me Thursday and discussed the historical lows that turned up in this report. Well, Brian, were the pre-report estimates kind of on target here for the cattle on feed?
For the total on feed, they weren't too far off. We ended up down about 2% at 9.84 million head on feed, and we're expecting to be down about 2.5%.
And I understand placements and marketings were kind of remarkable in the fact they were kind of historic?
They were. Our placements were down 7%, and the expectations on that were to be down even more at about 9.5%. And then marketings were down another 9%. So it's getting tighter and tighter.
And total U.S. cattle on feed, that was a little bit higher than what the pre-reports had kind of put it?
It was. We were down 2%, and we're expecting to be down about 2.5%. So we do have a few more on feed than what was expected.
So kind of in the bigger picture, the overall numbers maybe not quite meeting expectations out there.
No, the big thing, I guess, when looking at the big picture is that we're seeing more, we've got such a tight herd, we're seeing more smaller cattle go in. And that's where the increase is in their placements. Nebraska saw a 22% increase in lightweights, and Texas saw a 13% increase in lightweight placement, but the other weights were actually all down.
All right, we're at the Labor Day holiday weekend, kind of the unofficial end of summer here. Is this, retail demand for beef this weekend, is that going to move the meter any, have any real impact on the market?
Well, there's some potential there. One of the big things, the same day the cattle on feed report came out, there was a cold storage report that came out, and the cold storage is 21% lower than it was a year ago, and it's at the lowest point since 2001. So we're getting real tight supplies there too. And I think that's going to make the market a little more sensitive to increases in demand, such as for Labor Day weekend.
And as far as prices, probably will stay about where we are this market?
I think so, yeah.
Before our feature story, let's check the trivia answer for this week. The correct choice is A. Pine is softwood, and softwood comes from conifer trees, which means trees with needles that stay green all year.